Hello, my name is Michael Kvistad. I'm a lawyer here at Beresford Booth, and I practice mostly in mergers and acquisitions, business law, and real estate. And today I want to talk to you about real estate transactions, and specifically if you own real estate in an LLC and want to get financing. So, owning a real property through an LLC can have many advantages, and really owning or having an LLC offers many advantages. The first of which is liability protection. That is the great aspect of an LLC. I imagine it as a moat, or the walls around a castle. I think the moat's insurance, but the walls itself or the castle of the castle is the LLC. They also can often give you potential tax advantages and flexible ownership structures, which is a real plus as well because maybe you have a member, maybe even a family member who you just want to give, 3% to. That's really easy with an LLC. Anyways, what we're talking today is about financing property that's held by an LLC. And that's kind of a different animal. Most people have who own a home have gone through financing on a house. Those are often done with conventional mortgages, which are mortgages backed by the federal government. So they are a little safer for lenders to give out. Lenders like to loan that out because they're secured through the federal government. And so in return, they give lower interest rates. Well, when doing commercial loans through an LLC, we don't have that benefit of those government-backed loans. And as a result, LLCs have to pursue commercial real estate loans, and they come with certain various requirements that most residential loans don't have. And this applies even if you're purchasing residential property to be owned by an LLC. So residential property that's a second home or that is going to be rental property, still the same, even though it's residential property, because it's owned by an LLC, because it's for business purposes and it's not owner occupied, it has different rules. And so for an LLC, one negative aspect of this is, or just something to keep really in mind of, is they have higher interest rates than conventional mortgages. The underwriting requirements are more stringent. So the review by the bank is more stringent. There's also larger down payment obligations some of the times, and increased documentation and due diligence. So you really have to have your own house in order to make sure you have all the documentation that the lenders require. And this all makes loans more expensive, both on the bottom line of the loan, but also the time that you have to put into getting the loan. Uh, many commercial loans also are between 5 and 15 years, unlike a 30-year residential mortgage, conventional mortgage. And while that's on its face just fine, a lot of loans are amortized over 30 years. Meaning, if you've got a 10-year loan, once you come up to that 10-year mark, you have to pay off the full amount of the loan, the other 20 years of payments you'd ordinarily have. And so that's called a balloon note, where where it balloons at the end, that final payment. And those can be tough to navigate for business owners, especially if you have to refinance, as rates may have changed and gone up, or if you're trying to sell the business because there's some uncertainty as to what's going to happen with this large liability that's coming down the pike. Um, there's also something to take into account of is credit history and personal guarantees. LLCs are separate legal entities, and as such, they have their own credit profiles. They are owned by two members who may, in this case, be individuals, but they don't have those individuals' credit profile. They have their own credit profile that's established through its own credit history, just like an individual would have. So time helps. Paying off credit cards, paying off debt, all those things that help with credit, a lot of LLCs don't have, especially new LLCs. And it can be tough to establish a good enough credit to loan money to without a personal guarantee or personal assets in such a case. So If there isn't a long history of creditworthiness that a bank can rely on, the lender, may look for personal guarantees of the loan signed by the members, typically all the members of the LLC, or at least the majority members. May require a pledging of personal assets. So maybe the collateral isn't just a personal guarantee, maybe it's a home or some other personal assets owned by the members. And with this perceived risk, the interest rate may be higher than just the normal commercial loan, which again is a little higher than a standard conventional residential loan. And while personal guarantees and pledging of assets are great ways to get financing, it undermines the main benefit of a LLC, which is that liability protection. Because as to that debt, the individual members, or I should say the members, whether they're individuals or not, are subject to that debt since they personally guaranteed it. And that's something a lot of LLC members and LLCs don't want to have happen, right? They want that liability protection. They want those walls up. They don't want any, gates through which the members owe any money. But that's very common, especially with new LLCs. It just is. The last thing I want to cover is really the importance of an LLC agreement. Many people who have LLCs don't have LLC agreements, and especially when it comes to financing, they're critical. An LLC agreement lays out the structure, the roles, the responsibilities, and the financial arrangements of the members. And lenders can use this information in several ways. One, an LLC agreement clarifies ownership and authority. So lenders need to know who can bind the LLC to the loan agreement, and the LLC agreement spells that out. It also outlines profit distribution and capital contributions. So who's getting what money as profits and who has to put in what money into the LLC, that contribution. And that helps the lenders kind of assess the financial stability and maybe the commitment of the members. An LLC agreement also demonstrates organizational legitimacy for the LLC. A formal LLC agreement signals that it's professionally managed and the members are serious about its operations. And lastly, it's often a lender requirement. Sometimes banks even require them for a bank account. Sometimes, where many commercial lenders will not proceed with underwriting without an LLC agreement. And without that document, financing can be denied altogether, as a matter of fact. So these are some things to keep in mind. There's a lot of benefits, of course, to an LLC, and I always recommend them. Always recommend them when owning real estate other than your home. Investment property, second home, business property, anything like that. But there are some challenges that come with it, right? There's always costs and benefits to everything. And this is just a bit of a help, hopefully, for you when you're looking at financing while owning an LLC. All right, I want to thank you for your time today. If you have any questions, please don't hesitate to reach out to us. Thank you very much. Bye-bye.